Hello traders, Gary Wagner here. It is 1:31 in Honolulu, 6:31 in New York on Thursday, 29th day of February 2024, and this is the evening report for gold and silver. An interesting reaction to the release of today's PCE report. While it was expected inflation to come in much hotter at 0.4% month over month, the actual numbers were 0.3%, which did have a strong knee-jerk reaction in multiple markets, taking equities higher as well as gold. Gold is currently trading at $2,051.80. On closer inspection, we can see that it gained about $2.80 in aftermarket trading, which is what we are looking at, and $12 in New York. Quite a nice move when many analysts were looking for gold to trade lower on the day. The recent price range in gold was between the lower 100-day moving average and the higher and short-term 50-day simple moving average. I believe that a break and a close above the 50-day moving average would be a strong indication of higher pricing. That is precisely what we got today. You can see that gold futures closed just above that. If in fact we see gold show strength throughout the evening and into early trading in New York, it would certainly trigger a buy signal. If that is the case, we will send out a special trade alert with a buy recommendation in April gold, and we'll talk about our specific stop placement when we send that out. However, what we can address right now is, if we are correct, what our upside targets are. Our primary and first upside target is $2,073. It's based on these series of tops here that also match loosely with these tops that came in towards the end of January. Whether it is a resistance point that has become support based on recent highs or tops, or moving averages, they both hold weight. And therefore, this would be initially where I would look to exit the trade. Of course, the brass ring, as far as I'm concerned, is the top that came in at the end of December above $2,100 per ounce. That is exceedingly close to the all-time record high. The key to both of these instances where gold traded to a high closing value is that on both instances it was unsustainable and gold quickly retraced in each of these two occasions. Silver gained well over 1% in trading. That is this green candle here, a gain of 1.10%, 25 cents added per ounce, taking the March contract to $22.88.5. As you know, I have been under the assumption that silver would track lower, either to about 22.53, that is the 78.6% fib retracement, and even as low as these recent lows that have come in at $22.20. However, we absolutely understand that it is fundamental events that move a market and not technical data. In the case of silver, the report that came out was not as hot as expected, which renewed hope that the Federal Reserve would cut rates sooner than later, although we're still anticipating June to be when cuts are actually implemented. Nonetheless, we saw a nice move up in silver, and although I had been exceedingly bearish, if we get follow-through buying tomorrow, moving it back above at least $23 on a closing basis, that would be a strong indication that the best strategy would be to enter from the long side. More importantly, if we do that, because we are at the last days of this month, we will switch over to the next most active contract, whereas gold trades every 2 months, moving from active contract to active contract. Silver moves to 3 months, a more standard time frame with most commodities. Another interesting facet of what we witnessed today following the release of today's inflation report was that although gold and silver moved higher, that occurred concurrently with dollar strength. The dollar gained 0.2%, and the index is currently fixed at 104.158. As we have clearly noted over the last couple of weeks, since the 12th day of February, when it hit the high at 104.90, we have seen the dollar have a slow and methodical move to lower values when compared to the basket of currencies it trades against. Now we have seen the second consecutive day of dollar strength, the dollar moving higher when compared to the previous day. The fact of the matter is that they do not always move in tandem, meaning when gold and silver rise, the dollar falls. In fact, there are a couple of instances where that correlation gets flipped on its head, but the two most common events that occur to cause a disconnect between dollar strength and precious metals weakness is A, geopolitical upheaval or a rise in geopolitical tensions, because both the dollar as well as gold and to some degree silver have continued to act as safe haven assets in times of concern. Number two is when the Federal Reserve is actively changing the monetary policy, specifically during points in which they're doing quantitative easing. Now, we have seen quantitative tightening be the overwhelming Federal Reserve monetary policy stance. However, their recent discussions are talking about rate cuts, which is most certainly related to quantitative easing, and therefore you would get that shift in correlation when they are actively loosening and making their monetary policy less restrictive.
This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.